Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to take a look at the H1 results of the Unilever, which were announced last month. We will see how the company's earnings for the first quarter, the first half of this year, are going to impact its outlook for the share price, and also the forward guidance provided by the company will also be analyzed, and we will be considering these fundamental factors and also consider the technical side to see if there is any emerging trade in the Unilever stock, whether we can go for any investment or whether we should simply sit on the sidelines. All these factors will be considered as we look at multiple factors affecting companies' share price. The H1, the first half ended June 30th, was quite good for the company. Company registered almost double digit, not exactly double digit, but 9.5 is not really far off from the 10%. So I think 9.5% growth in its revenues was quite a good number. And if we have to look at it from the point of view of its initiatives and the results these initiatives are bringing in, I think it is quite a good story for the Unilever that it has been able to sustain this growth momentum with inflation running high and many of the other segments cutting back on the spending, but in comparison to its peers, its competitors, the Unilever is holding strong and expecting the second half results to be equally good, if not more, and this earning growth is likely to be sustained. Let us now go into the details and see more or less. These are the segment results, and here you can see that there was solid growth for the first half with underlying sales growth at 9.1%, which is quite good. The only segment where the growth is on the lower side was the ice cream, with growth at 5.7%. But apart from that, all other segments are bringing in quite a lot more money in comparison to the sales in 2022, and its operating margin has also improved with now the operating margin at 17.1%, which is 10 basis point higher in comparison to what it was making in the first half of 2022. These are half yearly results. We were usually looking at quarterly results, but Unilever announces half year results, and then the trading statement comes in between. Trading statement will come in for the third quarter. Good with underlying sales growth at 9.1%, with growth being seen in all these major segments where the company operates: beauty and well-being bringing in 9.1%, personal care contributing 10.8%. Home care is also quite robust with 8.4. Nutrition is in double digits and 10.4. The only weakling in relative terms is the ice cream segment. But here, if we look at the net contribution, the ice cream is also bringing in quite good amount of revenues. Just that the growth is not that strong. There has been increase of 2.7% in total revenues for the company. The dividend yield stands at 0.4268 pound per share. Now, if we go into the highlights of the first half results, you can see that operating profit improved 3.3% to 5.2 billion UK pound, and also the company's strong brands, the brands which bring in more than $1 billion each, £1 billion each, are contributing nearly 55% of the group turnover, with underlying sales growth at 10.8%. Also, company has done some changes in its portfolio with acquisition of Yaso and sale of Huawei brand in North America. Outlook: in these uncertain times, the company is expecting a strong underlying growth in the second half of this year as well. It is expecting the growth for the full year to be about 5%, which is going to be quite a good number to consider in overall scenario. Now let's go to the technical side as we have considered these underlying results. This is the company's presentation where it has given us insight into the each major segment which is contributing to the good performance of the company. So if you want to go into the nitty-gritties and look at the minor details, you can access these presentation provided by the company on its investor relations platform. Let us look at some highlights before we turn our eyes on the technical side. The Q2 growth stands at 7.9% in terms of year on year, whereas the first half growth, cumulative growth for the 6 months stands at 9.1%. The price growth is lower, but the volume growth is still quite strong. Competitiveness stands at 41%. The margin is up 10 basis point. Earnings are also up, and the free cash flow is also up. So all these key metrics are in positive territory for the company. Here, there is a geographic breakup of where the revenues come bringing where the revenues are coming for the company, with growth coming in at 7.4% for the United States. The Indian growth stands at 9.1%, and the China is contributing 7.9%, whereas the emerging markets taken together have grown at 10.6%. The total revenue company is earning from each of these four major segments is quite good. Now, if we look at the company's segmental results, this is the second quarter growth in beauty and well-being in terms of year on year, with 8.8% growth for the second quarter. And for the personal care, the growth has moderated to 9.1% in the second quarter. And in most of these segments, we will see that the pace of growth of revenues has moderated in the second quarter in comparison to the growth seen in the first quarter. I think that can be attributed to the high base effect, with quite sound, quite solid growth already being seen in the second quarter of 2022. We had a relatively larger base for the second quarter of 2023, and that can also be attributed to this moderation. Same story here also in the home care, with sharp decline in percentage growth at 6.7% in comparison to 10.2% seen in the first quarter. So in comparison to the other segments, the growth moderation is a lot more in the home care segment. The nutrition is quite growing well at 8.9%. Ice cream segment, here also the moderation is being seen and is a breakup by different regions: Asia Pacific, North America, Europe, Latin America. Now we will move on to the technical side. This is the daily charting for the Unilever stock listed on the London Stock Exchange. We are looking at the CFD of the Unilever share. Now, if we consider the share price after peaking at 4,482.9 pound per share, the Unilever stock went on to moderate, went on to correct almost 12 percentage point, and from there on, it has gone on to consolidate with this fresh break on the higher side of the prior swing high. This happened immediately after the announcement came in of the company's first half earnings, and in the next day's session, we saw it closing higher by almost 4 percentage point. But after consolidating for a couple of days, the company again reverted back on the lower side. But even at the current juncture, we have the formation of higher highs and higher lows till it reaches this immediate swing low, which is there around 4,000, sorry, 3,934. So this is crucial for us to see what is going to happen in the near term. So unless there is fresh breakout on the lower side, I think the immediate outlook is still favorable for the consolidation with bullish buyers. So if you are looking for opportunity to buy the Unilever shares, you can indeed take your chances if there is correction for a couple of sessions and it doesn't really breaches past this immediate swing low even in further decline and it holds the ground, then I think you can indeed take your chances with quite a good sharp stop loss and expect the rebound to continue at least closer to this immediate swing high at 4,237, if not more. So even in the case of extended consolidation, you can indeed take your chances and profit from this consolidation, which is happening with slight bias on the bullish side. Since the low form in the month of June, we have seen it holding above these 3,944 level, and even now, though there is not much of a momentum, but it is not really declining. And also, as we saw on the fundamental side, the story is looking good for the company and immediately after its quarter half yearly announcement, we had also seen this spurt in the share prices, though it wasn't really able to sustain that momentum. But looking at its current pricing scenario, I think we have some some chances of getting it right on the bullish side. If you want to look at its near-term price outlook, I think it will be better for us to continue to expect this consolidation to last at least for next couple of weeks. There is no immediate trigger for sharp moves on the either side, and as long as this immediate swing low holds, with bias on the bullish side, we can indeed take our chances and go for buy trades whenever we feel that now the stop loss is quite close enough and we can take our chances. Let us break into the hourly timeline, see if there is any emerging opportunity in a couple of sessions, in next few sessions. Here also, the price momentum of the company is mixed, nor it is rising fast, nor it is declining much. Now, there was this sharp decline in the first week of this month, but afterwards it has stabilized and it is quite difficult at the current juncture to say how things will shape up, but from the medium term, we do have clarity in place, and for that, all we have to do is keep this immediate swing low in mind. So, from the medium term, the things are slightly bullish, but short term, it is quite indecisive at the moment. Let us look at it from the longer term perspective as well. From the longer term, it is still bullish with this continuous formation of higher highs and higher lows. And here also, unless the immediate swing low is broken, we can indeed take our chances. So that is the possibility from the longer term as well, with the stop loss being quite wide. So I think we will have to indeed trade with caution. But apart from the short-term indecisiveness, the medium term and the longer term are still quite favorable for bullish trade. And I would suggest that you keep looking for the buy on dips opportunity where you feel that the stop loss is quite good. Stop loss is variable and you can take the calculated risk. So that is all from my side for today's session where we looked at the fundamental as well as the technical story of these stocks, the consumer goods, the fast moving consumer goods segment, and we have seen the reasons for us to keep expecting the share price of Unilever to remain strong in the medium term as well as in the longer term. And all we need to do is keep looking for good enough opportunities with good risk reward ratio. So that's all from my side for today's session of Daily Stock, and I'll be back tomorrow with a equally interesting stock to work with. Do come back, see you next time around. Thank you all for joining in. Goodbye.